Good morning, guys, and welcome back to the Mango Grow for your daily Bitcoin and market analysis update. All right, so we had a lot happening yesterday, a lot of developments on the charts. So I figured that I'd go ahead and give you guys a quick update. Now, this is going to be a shorter, quicker video because I do have to rush for a doctor's appointment today. So let's go ahead and get started. Today, we're going to do a quick update on our cascading pattern trade. If you guys have been following, you guys know that we have an initial target of around 25K and then eventually to a zone of around 40K to 50K, right? Now, this is provided that everything triggers, that Bitcoin does what we're looking for it to do step by step, leading into the cascading pattern, breaking step by step, right? Well, things have been going really well so far. This ascending lower triangle that we're looking for Bitcoin to break and meet its measured move that leads into the inside of the falling wedge. Well, that has happened, and now we're sitting right at the falling wedge. Something interesting is going on over here that we'll be coming back to very, very soon. Dashboard update. Bitcoin, focusing only on the Bitcoin over here. The Bitcoin volatility is now currently sitting on red, 71 at the moment. Trend is along. Remember, over the past few days now, we've been keeping an eye on this. Initially, we were looking for the trend to flip from neutral to long. Volatility was sitting at the low single digits, right? I think we're sitting at only around 6, right? We were blue and 6, and we said, hey, this is the kind of profile that we love when we have the trend flipping along the lower time frames from short to neutral to long, and the volatility sitting really low. That's when you want to start building your position. Now, at this point, this is not the time you want to be rushing into the trade. When you see red over here, guys, it's literally telling you you might be FOMOing. So take a step back and really ask yourself, are your rules all set to yes? If your rules are all telling you, hey, you can go ahead and put on a trade, then by all means, go ahead. But this red sign over here, this red volatility should be giving you caution, okay? Should be giving you caution. So at the moment, like I've been mentioning in the previous video too, this is not the time to be getting aggressive on Bitcoin, okay? It was the previous few days and the weeks prior to that where I've been literally laying out a story for you guys, a bullish story for the long term, right? I've been saying that, hey, we're leading into the rising bull market. We have things that are being put in place. Be patient. And hey, even if you did miss your entries, that's all well and good. We will get opportunities, okay? We will get opportunities, and we'll be talking about it and laying out the story for you guys over here over the next few weeks and months to come. And in fact, you know what? I want to go ahead and talk on that a little bit. I've received a few people saying things like, hey, Sean, but Krisha said that we're going to have a pullback, and Bitcoin has risen since then. What the hell, man? But guys, what are you talking about? Bitcoin did have a pullback, right? Bitcoin had a pullback all the way down to 17,200. Krisha was talking about a pullback on the lower time frames, and then we had a bigger move based on the higher time frames. If you guys are going to be thumbnail readers, if you guys are going to watch only a single video, if you guys are going to watch only the first 2 minutes of a video and then make your trading decisions on that, you guys are not going to make it. Okay, you guys are not going to make it. We've been laying out a story for you guys over here over multiple videos, over multiple weeks, over multiple months. And if you guys are going to be lazy and try to get your answers and try to get your trading decisions over thumbnails, are you guys going to be thumbnail readers? Is that how you guys want to have your success? Is that how you think you're going to make your millions? By literally looking at a thumbnail and making your trading decisions? It's not going to happen that way, guys. Okay, if that's what you're looking for, you might as well just unsubscribe from the channel. I'm saying that with love, because you're just going to be disappointed, okay? We spent each day building these videos for you guys because we are laying out a bigger picture for you guys, okay? The big wins come with hard work. If you're not going to be willing to put in the hard work to actually learn concrete foundational concepts that you can apply to all markets in the future, then Mango may just not be for you. What I want you guys to do is not simply rely on us. I want to build for you guys the right foundation so that you will never need us. So that if you get to the 1 million mark that many of you guys want to, you will end up saying, hey, you know what? I know enough that if I just add on a little bit to my education, I can take myself to 10 mil. Trust me, guys. Trust me. You want to be here and you don't want to be one of those guys who reaches the 500,000 to 1 million mark and thinks to yourself, oh man, I've won the lottery. I'm so scared. I don't know what to do with this. I'm just going to hoard it. I'm just going to keep it. Or I'm just going to pull out of the market. And you're so scared on every single event that you do end up losing it all. It becomes a self-fulfilling prophecy. You do not want to end up like that. You do not want to simply be a thumbnail reader. All right. You want to learn how to do this. All right. With that out of the way, let's go on over to what we want to talk about next. CPI data came out yesterday. I need a sip of water. Damn it, I don't have water. Okay, let's just go on. CPI, it's really surprising CPI data. If you guys remember from yesterday's video, if you missed yesterday's video, you're too lazy to watch it, go ahead and watch it. Really educational, especially the bit where I talked about CPI and the FOMC meeting coming up in 2 weeks, right? What I talk about? I said that the data, the expected, okay, we talked about how what matters at this point, guys, is not really the nominal value, but the nominal value anchored against the expected value, right? The forecast. And I said that the forecasts were already so bullish in that the market was expecting good news, right? We had an expectation of deflation month over month. We had the expectation of a drop from 7.1 to 6.5 year over year. And core CPI too, we did expect a raise, but not that much at all, right? So what I was saying was that, hey, it's going to be really difficult for the market to actually beat this, right? To beat the forecast. And if the market's already expecting all of this good news, it has to be priced in. It has to be priced in. So at this point, there's more room for the market to be disappointed than for the market to actually be surprised in a positive way, right? But what do you know? What ended up happening? The market wasn't surprised in a positive way, but we actually met expectations. And believe me, guys, this is really rare. For the market to act, for the forecasters to actually meet expectations to the T like they did right now is actually very impressive. So yeah, the market clearly was like, whoa, there's a little bit of hesitation in the markets. If you go down and look at the lower time frame price action, you can see the market was trying to figure out what to do with the data. Hey, is this bullish? Is this bearish? We didn't beat expectations. Maybe we sell off, but hey, we actually met expectations. What do we do from here? Should we break support? Should we go down further? Should we go up from here? We'll be talking about that very soon as well. I do want to spend some time quickly talking about unemployment claims over here, right? Because I did have this data shown yesterday, but we did not talk about it. Unemployment claims have come down. Now, this is really interesting over here. Okay, what you guys need to understand is that the Fed has two mandates, okay, to keep inflation down and to keep high employment. Now, usually you would think that, or the school of thought is that you can't really fight both battles at the same time. In that if you try to get inflation under control, you are going to have to see some pain in the unemployment market. And what we are seeing instead is that unemployment claims are coming down, which means that less people are filing for unemployment while the Fed is successfully fighting inflation. This indicates a potential soft landing. And if you guys do remember, all the way back in around October, or was it earlier back then in August 2, we were talking about it in our Discord, right? If you guys aren't in our Discord, by the way, please go ahead and join while you can. It's still open. We keep it open during the bear market. You can find us at themango.com/discord. Again, that's themango.com/discord. Again, we were talking about in our Discord. We said one of the big surprises could be that nothing breaks in the market and the Fed actually orchestrates a soft landing. Because every market commentator was talking about a hard landing, something's going to break, a hard landing, something's going to break. And instead, what do we get? Well, we're seeming to be getting a soft landing, right? And that was the only thing nobody was talking about. Nobody was expecting a soft landing because the Fed always ends up breaking something. But hey, when the market's always expecting risk, always expecting something to break, that kind of gets priced into the market and that kind of corrects itself. But again, that's a lot more nuanced than I'm making it out to seem. Okay, I'm going to go ahead and quickly talk about this price action over here. I'm going to spend some time with you guys during these, every now and then, talking about lower time frame price action. It will help you guys trade a tad bit better as well. Okay, so over here, right, seeing over here is a nice M-like formation over here, leading into the event, a big pump because of the good expectations by the market. And then you start seeing people take their profits. You start seeing the uncertainty leading into the event. And this is where all the action happened, right? This is where people are wondering, hey, do we break support, right? Do we break support and see further continuation down over here, or do we see a rise? Now, this is how I like to look at the price action. Again, remember, guys, these are not certainties; these are high probability ways to look at things. Okay, usually when you see the wick of the previous candle, okay, when you see a pickup first, okay, the first step is this. The first pickup, okay, is going to be your guide. It's going to be your anchor. When you see the wick get filled in again, right? So even though we got picked up over here, you can see that the wick got filled in. Okay, it got sold into. That's your sign to get ready. That's your sign to get ready. Because if you lose support after that, the market's going to fill the entirety of the move, right? So this move here, this arrow that I've marked out, right? That gets filled as well, especially if we break support. So you got to get ready. You got to get ready because the direction the market is taking, that's the momentum. And that wick getting filled up was not a good sign. But what did the market do instead? We did not break support. In fact, we took out the low of the previous candle, and then we closed above support right over there. That close over there is telling you that, okay, you know what, the market wants to fill the other way, and everyone at that point, guys, is going to have to make a decision as to whether they want to stay in their trade, if they are caught offside or not, right? If they decide to endure some more pain, it's going to cause more momentum in this region over here because they're going to have to close their shots at higher price, and that around that period, liquidity on the order books just disappear. Market makers start pulling their bids higher and higher and higher, right? Which is why you see such a big move. And now at this point, everyone who got into position over here, expecting that, they start taking profits in this region over here. So you kind of want to be careful over here. That being said, we do have something interesting going on the higher time frames. But yeah, just a quick guide on your price action. So for example, right, if I didn't have an indicator over here, I'd be waiting for this level to break, this horizontal level to break. So you don't really need your indicator, but they can be really, really useful to look for confluence and stay objective. Okay, so yeah, now let's go ahead and move on over to the charts really quickly. Alrighty, here we are. We're looking at the 1 hour time frame. We were just looking at a screenshot of this very chart on our notes, and like I said, I think we are looking at a little bit of a distribution for formation over here. Again, this is the lower time frame. So if we do pull back based on this distribution, when you see a structure like this, right, guys, right, these are all bearish structures. It doesn't mean it can't break up. It just means that it has a higher probability of breaking down. So you start looking for this to break up when you start closing candles above this region over here. X marks the spot, and then definitely once you start taking out the highs, right, you don't start seeing candle closes. But even then, right, be wary of a formation like this, a wick up over here, just tapping into liquidity and then a push back down, right? So be careful of that too. This is the low time frames, and you have to be careful, especially when we have higher time frame resistance over here, and we are putting in a distributory formation structure, weak structure on the lower time frames. So we'll be switching on over to the higher time frames really quickly. Let's go ahead and talk about where we can pull back down to. We could see a move down to this level here around 18,400. We could see a pickup over there. I definitely think we're going to see a pickup around this region over here, around 18,000, right? So look out for around 17,980 to around 18,090-ish to get a lower to mid time frame bid. Okay, so yeah, that's your 1 hour time frame. We spent enough time on the 1 hour for today's video. Let's go ahead and talk about our cascading pattern. Right over here, we're looking at our bigger rising wedge that broke down, did not see continuation, instead put in a nice little ascending triangle right over there, right? And again, I've talked about this many times in Mango. My favorite formation is when we have a falling wedge that fails to break up, instead breaks down and doesn't see continuation down either, but breaks back through the falling wedge and sees the big move to the upside, right? And when we first talked about it during this period over here, during this past few weeks, we were putting in that ascending triangle, and we said that, hey, if we break this ascending triangle to the upside, oops, apologies, put that back in place. If we break this ascending triangle to the upside, we are going to have a measured move, right, that lines up to the top of the wedge. And what do you know, guys? We broke the ascending triangle. Let's zoom in and see how subtle that ascending triangle break was. Look how subtle that was. It was deceivingly bullish, that weekly candle, right? This Monday, we even got the dashboard call too, a day after, or was it 12 hours after? I forget. But either way, right there, got the call, got your signal, market reacted immediately, and the measured move of our ascending triangle actually, by the way, points a tad bit higher. Oh, And actually, it did meet immediately. So you guys can see that my measured move is a diagonal direction, right? But since the candle happened in one big move, it's lining up perfectly at the top of the wedge. So yeah, met the measured move, and now the big question is, can we close above our rising or our falling wedge, right? If we can close above our falling wedge, we are going to have the bigger move to around $25,000, which, by the way, lines up with our weekly 200 moving average as well, right? So confluence over there, but we'll get back to that very, very soon. Okay. If you guys do remember, there was something else that we were looking for Bitcoin to clear that lined up with the center of this wedge right over here. And that, ladies and gentlemen, was our 4-day dynamic that has been holding as resistance ever since $46,000, ever since this region over here, right, where we had the bull trap, broke above, false breakout, and then boom, 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 boom. We've been holding this as resistance since then. We just cleared the 4-day dynamic today. Now, bear in mind, and I do want to emphasize the word bear, that we are still blue, right? The 4-day dynamic is still blue. It's not flip green just yet. Remember, it has 3 colors, red, green, and blue stands for neutral. You can simply look at the little info board right over here. You can see that the trend is neutral. Tempo is activated though now. This white candle means that the dynamic tempo has been activated, which is a bullish sign. Yeah, the tempo has not been activated again since same region. So last time it was a false breakout. Is it going to be a false breakout this time? It's left to be seen. I'd rather wait for the trend to flip green before getting too excited. And more importantly, guys, we have our wedge that's outlined over here, right? We have our ascending triangle, our wedge, and we have a 4-day dynamic, which is a good momentum booster. Hope that will hopefully lead to this wedge to break to the upside. But what was our guiding light? What was our guiding light to say that, hey, if we clear this, that's when we can say that, you know what, things are really beginning to look good now? It was our weekly Tenkan, right? We said we're going to use the weekly Tenkan as a guide. And then if we break this, we're going to be looking for the move to around the weekly 200 moving average, which is coming at around $24,600, right? Well, yes, we have broken the 4-day dynamic, but where do we come up and smack up against? Right up against the weekly Tenkan to the T, the wick right over there, right? So while the 4-day dynamic has been cleared, we still have resistance overhead. Do not make the mistake of getting tunnel visioned. Have a checklist that lists everything you want cleared before you get too excited. You gotta have rules written down to keep your emotions in check. So yes, 4-day dynamics cleared. It's a good sign, but we're still up against resistance. And for those of you who have missed out on building a position, well, this is a good thing, right? We may see the Tenkan act as resistance and we pull back into the 4-day dynamic, give it another retest at the bottom of the zone over here, coming in at around 18,060-ish, right? Which lines up with what we talked about on the 1-hour time frame, where I marked out this zone right over here, right? Which is around 18,000 and let's get 17,900 to around 18,090-ish. So a pullback onto the 4-day, the bottom of the 4-day dynamic zone does line up with that. And that does line up with the fact that we are at the weekly Tenkan as well. So at this point, guys, you may get tempted to be getting into position because you're kind of scared of price running away from you. Don't let that bother you. As a trader, you need to get into the mindset that, hey, I am okay buying higher or lower, but I'm not buying here. That needs to be one of your mantras. I'll buy higher or I'll buy lower, but I'm not buying here. Trust me, in the long run, you'll be better for it, right? The path price takes is a path through least resistance. And at the moment, we have resistance overhead. We have the weekly Tenkan over here. And I believe the weekly 21 EMA is coming in right over here as well. Let me go. Yeah, right over there, guys. Weekly 21 EMA. Right. This is the first time we're testing the weekly 21 EMA in a very long time. Again, all the way since over here. Jesus, this is a critical point Bitcoin's at. Okay, do not get too excited here. Critical point. If Bitcoin clears this, then get excited. Okay. Oh, by the way, weekly 21 EMA, testing it for the first time in a very long time. And if you guys do remember, the weekly 21 EMA, as soon as we clear it, the mango discount is going to be deactivated, right? So we've been running a discount that gives you a 21% on all our products, 21% off on all our products, as long as you're underneath the 21 EMA. And we've been underneath the 21 EMA for a very long time. So no excuses this time, guys. If we do clear this, we're going to be deactivating the discount. So yeah, is there anything I do want to talk about? Let's go ahead and take a quick look. Oh yeah, this is the daily time frame with the same pattern drawn out and the Ichimoku, right? You guys can see that we did have our Ichimoku TK cross broken to the cloud and had a edge to edge trade. In my opinion, this qualifies as an edge to edge. We could have a tad bit more of a push up all the way up to the daily 200 moving average, but if you draw out a horizontal on the flat of the cloud over there, we've hit it to the T, right? So yeah, this is an edge to edge trade in my opinion, but we could definitely make our way all the way up to the daily 200 too, especially if you see a liquidity tap of the lower time frames. If these X's hit over here, right? This X here and this X here, this could push up, hit the daily 200 moving average, and then we may see some resistance over there. It's going to be interesting to watch the price action over here, guys. If there's any time to be watching the lower time frame price action and learning, it would be now, right? Some good juicy trading opportunities over there as well. All right, my mouth is so dry. I hope you guys enjoyed this video. Let me know in the comments down below. I'll see you guys in the next one. Do the mango way, do the easy way.